Alrighty, hello everybody. Jeremy here with Escape Velocity Trading. Got a comment on one of my videos here a few days ago with a question about Tesla. This question was from Michael Allen, and he was wanting me to do a quick technical video looking at the technical analysis of the Tesla chart and giving my 2 cents worth. And I commented yesterday to him saying I would do it this morning, and that, spoiler alert, the chart looks gross. Absolutely grotesque. And that was before the 8%, now 10% gap down on earnings. So, why did I say this chart looks absolutely disgusting? First off, daily chart. We had been in an uptrend, setting higher highs, higher lows, met up to a longer term diagonal resistance line, broke it, came back up, confirmed it as resistance one more time, and now broke the support line here, confirmed that as resistance, rolled over. On the daily chart, RSI has been super overextended at the downside for a while, but the chart is actually picking up bearish momentum, so I'm not expecting that to resolve itself anytime soon. MACD is crossed bearish, and it doesn't look like it's really slowing down. In fact, you can see here the blue line is actually separating faster from the yellow line now, the signal line. So that is gross. If we take this out to a weekly chart now, you can see that longer term resistance line that I was talking about, the longer term support line that we'd been building off the lows, breaking that, confirming both as new resistance right here at this pivot from back in late December. And now rolling over, we've now broken all of the moving averages on the weekly chart. And if I zoom in on that a little bit, you can actually see the shorter term moving averages, the 9 and 20 are already curled over, and the 50 period SMA is flatlining and starting to curl and looks like it is going to curl and cross below the 200 period moving average on the weekly, which is also a really bad look. RSI and MACD are also bearish on the 3-year weekly chart. And just to top it off, let's kick things out all the way out to the max monthly chart. Now, I very rarely look at monthly charts, but if we look at this, monthly chart has broken all its moving averages. Two of them are trending down. The third one that had been acting as support here for the last 3 months or so has now broken, and broken in spectacular fashion. So looking at this, where could we go? There is a little bit of support here around 150. There is a touch of support here at 100. Between the two of those, I am kind of anticipating, honestly, that we hesitate maybe at 150, but we are on a journey down to 100. We could also take this out and draw a little diagonal support line potentially, and depending on how quickly the price falls, that could come up and give some extra support somewhere around this 150 zone as well. We would need to see some slowing of the momentum to the bearish downside, and we would also need some long-term consolidation for several months for that support level to play a role and coincide with that 150 zone. Otherwise, these are kind of the three lines in the sand I'm looking at. 150, probably down to around 130, and then down to 100. So also, since we just had earnings, let's talk about that for a second, right? So drop this back into a daily chart. What the hell happened here? So there are a few reasons that Tesla is selling off aggressively. First off, on earnings, it gapped down 8% and is now run a little bit over 10%. Because Tesla missed on revenue, they missed on adjusted EPS, earnings per share, and they also missed on adjusted gross income. Now, if that wasn't enough, they also issued a decreased guidance for 2024, and Elon Musk himself called out the company BYD from China, which is actually backed by Warren Buffett. And he said that he is seeing huge increased competition from China specifically, and their EV companies, and specifically called out BYD as being a formidable opponent, basically. We also have a bunch of news headlines which are negative. The first one was Hertz car rental is liquidating thousands of EV cars from their fleets, most of which are Tesla, from what I understand. They're selling those used. That is impacting demand for new and used Teslas on the market. So that's negative. Tesla is also cutting their prices in China because of BYD and the increased competition there. So they're cutting prices across the board, trying to keep up with the new players on the scene that are honestly uh, causing a lot of issues for Tesla. Tesla also had a 2-week production halt in China, which didn't help anything since China is their biggest competitor right now in terms of different countries and demand for Teslas versus other rival companies. So their production halt there did not help anything. And then finally, to top it off, Elon frickin' Musk is honestly being a really big negative catalyst for Tesla right now, too. Not only has he been in the spotlight for his buying of Twitter and converting it to X and all the nonsense there and burning, I don't even know how much money, but a huge amount of money for that. And I believe he sold off a lot of Tesla shares to be able to fund that. So that wasn't great. But now the latest thing Tesla is doing, or excuse me, Elon is doing, he is now demanding that the board of directors give him a bunch of extra Tesla stock because he wants to have 25% voting power in Tesla. And he basically said point blank, if the board of directors does not give me what amounts to basically $80 billion worth of Tesla stock, that he doesn't feel comfortable taking Tesla and making it a leader in AI and robotics. And he will start looking at creating competing products outside of Tesla, basically meaning he's going to go start another company and shift all of his assets and money behind that and try to work on something that he has more controlling interest in because he's throwing a fit and he's honestly a child. So that is a huge, huge negative and really ill-timed for Elon Musk to be throwing that on top of the already dumpster fire, which is Tesla right now. I have zero interest in this company or stock right now until at least 150, but probably more like 100, honestly, which represents about another 45% decrease from current prices. So Tesla is completely off my radar for now. I might get interested depending on if we get some kind of a pattern either at 150 or 100, but 150 will be kind of a glance at it, and 100 will be, okay, now I need to actually look at this seriously. So I hope that helps, Michael, and thank you so much for the question. And if anyone else has questions on different stocks they want me to analyze or give my 2 cents worth, I am more than happy to do it. Hit me up in the comments.